Ladies and gentlemen, before we start this presentation, please make sure your audio volume is properly adjusted. So we know you can hear us clearly, please click on the hand icon on the control panel located on the upper right side of your screen. Thank you. If you're experiencing any audio difficulties, please refer to the audio pane also located in the upper right side of your screen. Hello, I'm Kevin Carroll, Director Capacity Building Programs at ACI World, and it is my pleasure to be your host for today's ACI Global Training webinar entitled Economic Impact and Policy Responses to the Ongoing COVID-19 Crisis. This is the first in a series of webinars ACI will provide to members and world business partners on the topics related to the current COVID-19 crisis. A second webinar is scheduled for next week that will cover business continuity. And as a reminder, that publication is free for download from ACI's website, with further details being sent to you after the webinar. Please note the recorded version of this webinar will be available on the ACI website by the end of today. During the main presentation, you can write questions for our speakers by typing them into the questions pane, located at the control panel at the upper right side of your screen. At the end of the presentation, we will be addressing some of your questions to the panelists. As revenues continue to contract rapidly, airports are taking all possible measures to preserve financial stability. While airports have high fixed and unavoidable costs, they're reducing to a minimum variable costs by closing portions of infrastructure, postponing capital expenditure, and addressing staff costs. These difficult decisions are not being taken lightly, but are necessary in response to the crisis facing the industry in this time of business unusual. Let me introduce our presenters for today from ACI. Our main speaker will be Patrick Lucas, the Director of Economics, who has been burning the midnight oil, working on the updated traffic forecast and economic impact for the members. And he'll be supported by his colleagues, being Ilya Lyotov, Manager Economic Policy, and Guillaume Doradier, Data Scientist, Airport Traffic Statistics. As the current situation is quite dynamic, we're aiming to provide a future webinar on economics and policy in the coming 2 to 3 weeks. Patrick, over to you.
Thank you, Kevin. Let me just get started. Thank you, Kevin. Thanks for that introduction. I would like to just give you a roadmap here of what I will present. So I will start off with the backdrop. Before we talk about the current crisis, I'd like to look at where we were in 2019. And then we'll address the economic impact and specifically the impact on airports. We'll also look at the shape, the potential shape of the recovery, right? We're presently entering a recessionary state, but we will recover from this. And finally, we will talk about the policy responses. What are the relief packages or the recovery packages that we need to be thinking about and that are actually occurring right now? So let's look back. Let's look back at 2019, or at least the second half of 2019. Growth was predicted to be moderating, right? Growth levels were in some respect weakening, but at the same time, you had a lot of these geopolitical concerns, geopolitical risks, like trade wars, right, between China and the US. You had Brexit, UK leaving the European Union. But some of these things, I mean, now they even seem a bit futile or even trivial in the current context. But some of those risks have alleviated. One of the things we saw, especially in the last quarter of 2019, was a heightened awareness of climate change and the Greta effect. And that was starting to have an impact on air transport demand. More confined to places like Europe or Northern Europe. Now, despite all these risks and weakening, weakening growth, we also saw consumer demand and consumption remain relatively strong. So if we look, I mean, towards the end of 2019, unemployment rates were really low, at an all-time low, at least in the post-Great Recession period. So if we look at, say, countries of the OECD, so those are the richest countries in the world, we saw unemployment rates going, below 5%. So on average 5%, but countries like the United States at below 4%. So of course, when you have very low unemployment rates, you have very strong consumer confidence and consumption. One of the things we need to bear in mind when we talk about GDP, or gross domestic product, which is a measure of a country's income, a big chunk of that has to do with consumption, right? And that's very much guided by consumer confidence. And I'm going to come back to that later in the presentation. So where are we now in the first quarter of 2020? Well, unfortunately, as we all very well know, we're hit with this crisis. A crisis, the COVID-19 crisis, which started off in Asia and then it quickly spread in a span of weeks to other regions of the world. Literally, I mean, going back a few weeks ago, we've seen this exponential growth in places like Europe and North America and other places as well. As it stands now, we are slowly approaching 1 million confirmed cases. On this map that you see here, of course, the darker red countries are those countries that have over 100,000 cases. Yes, the death rates do vary by country. I mean, there's not necessarily a discernible relationship between, say, death rates and demographic makeup. Although places like Italy, which does have a very high death rate, also does have an aging population. About 23 to 24% of the Italian population is over the age of 65. So this is the case as we see it right now. Now, what is the impact on air transport demand? How can we break this apart conceptually from supply and demand factors? Well, let's start off with the supply side. As I said, we've seen this outbreak spreading across many countries. And as a result of that, governments have imposed a number of travel bans. So as it stands right now, there's more than 110 governments that have placed full blanketed travel bans on incoming travelers, right? And the rest of the countries have some form of restrictions. So literally all the countries in the world have restrictions on travel right now. Now, a picture, they say a picture is worth 1,000 words. So we have this map here that shows basically all the travel restrictions across the globe. So any country that you see that's either blue or gray has a travel restriction, okay? And here, I mean, I just list some of them for some of the major markets. So of course, you have the US there. So bans travelers who have been in 28 European countries, China and Iran. Just recently, Brazil now has banned all foreign travelers. And then you could see the other ones as well. Now, one of the big game changers, especially in the drastic decline in traffic, was the transatlantic flight bans, right? Right around mid-March, this was a definite game changer for the industry. Now, let's look, so that's the supply side. So the supply side has been completely cut off, at least from an international travel point of view. Now, let's break this down from an air transport demand point of view. So like any good or service, demand is a function of two main things: income and prices, okay? So the income factors are very much guided by macroeconomic phenomena, and the prices are very much microeconomic in nature. So let's start off with, and then there's everything else, which is a bit kind of trickier to model here. But by and large, the demand for air transport is guided by income and prices. So let's start off with prices. Where are we with prices? Well, oil prices have collapsed. You've had this Saudi Arabia, Russia oil war. So there's been this increase in production. And of course, there's been this huge drop in global demand, which has pushed down prices. This won't have any effect on the airlines over the short term. That's for sure, because of all the other factors, right? So this is something in terms of input prices will have little impact over the near term. The big impact, or call it the negative impact, will be on the macroeconomic side. We're in a recession right now. We're actually entering a recession. The thing about recessions, though, typically, you only know that you're in a recession after the fact, because it's typically 2 quarters of negative growth, but the indicators are all there. So if we look at the Dow Jones Industrial Average, which is a leading indicator of the economy, the market has collapsed, and some say it's still yet to be bottomed out. Another indicator is the jobless claims, and this is coming out of the US. And anyone who has worked with data and looked at this, when I was looking at this and looking at the data, I was asking myself, is this a mistake? Because it's a huge outlier. So just last week, there was 3.3 million jobless claims in the United States. So this is 4 times the previous record that was set in 1982, which was another major recession, at least in the US context. Here again, something from the OECD, looking at the first quarter. We're looking at GDP contracting in the realm of 25% for some major economies, okay? So here, of course, you have Canada, Germany, France, United Kingdom, Italy, and the United States. Back to consumer confidence. Earlier, I was saying in 2019, consumption and consumer confidence was strong. Retail sales were strong despite all the geopolitical risks and uncertainty. As it stands now, consumer sentiment has dropped significantly, okay? So the confidence, or the discretionary buying power of consumers has dropped significantly. And this is true for many other economies. If we look at South Korea, for instance, and even those economies that are kind of coming out of the other side of this tragedy, still have a relatively low consumer confidence, or even in this case, as we can see, a huge drop in consumer confidence. Now, so just to summarize, if we look at the present health crisis and its impact on the supply side, the demand side, the supply side has been completely cut off, right? So international aviation in general has come to a standstill. Demand, we talked about the pricing factors. It's very much irrelevant in this context. Very much irrelevant in this context, because we see so much contraction in income and the rapid rise in unemployment. Coupled with this, the loss of consumer confidence. Now, obviously, there's huge government intervention right now in the economy, huge fiscal stimulus packages, monetary stimulus packages to push cash into the economy, and to loosen credit conditions. Now, that being said, there's only so much fiscal stimulus and monetary stimulus could do, because people are not able to go outside right now to buy a home, or to go to a car show to buy a car. There is limited measures in terms of, at least on the consumption side. let's talk specifically now about the airport sector. Okay, so what is the impact on our sector and even beyond that? So let's first look at the relationship between the growth in the number of cases and the impact on the airport business. There's almost this inverse relationship that we see right now in many country markets, where as the number of cases escalate, then you of course have these traffic declines, and that's of course brought on by a lot of these travel bans. Now, the one thing about the airport business, I mean, it's directly correlated to traffic or passenger traffic. So as a result of these drastic traffic declines, you have huge revenue losses. Now, looking at passenger traffic, now if we look back pre-2020, there was this level of resilience year after year. There was every year there was some type of uncertainty regarding the economy. I mentioned Brexit earlier. In the end, I mean, this keeps getting postponed, and a lot of the airlines have kind of mitigated those risks. But year after year, there's these different crises, and air transport has kind of prevailed, right? So we've seen growth in the realm of 5% year over year over the last decade. Now, as we get into 2020, we're seeing double-digit declines in traffic. And now in March, we see a decline of 53% in year-over-year passenger traffic. We'll likely even see sharper declines in the next quarter. So if we look at the first quarter and year-over-year percentage change, so like I was saying earlier, across the globe, we see about a decline of close to 30%. Asia Pacific, of course, it was the region that was most impacted earlier on, has the largest decline. So a decline of almost 40% here. Now, if we look at 2020 as a whole, I mean, we're going from bad to worse, unfortunately. And this is the way we've modeled this, and we could even address some of these questions later, is looking at a baseline. So what was the forecasted baseline, in pre-COVID-19 conditions, right? So we've seen we're seeing a global decline in 2020 of about 40%, right? So you could see here across the board these massive declines for each region. There has been a complete loss of connectivity across the globe. Now, what does this mean in terms of revenue loss for the regions? You have an even sharper decline in terms of revenues. So we're looking at a complete revenue loss of about 76.6 billion USD for 2020. And here you could see, of course, the different regions. Europe with a massive drop of potentially 25 billion. Now, one of the things when we're calculating all this and making these simulations, and you come up with a figure of 76.6 billion USD, how do we contextualize that? What does it mean? What does it look like, right? Well, if we think of the typical airport hub, okay, so that's an airport that has over 40 million pax per annum. On average, they generate about 1.3 billion to 1.5 billion, right? So that's almost equivalent. So under the current scenario, that's equivalent to having something like the 60th busiest hubs in the world having their revenues completely wiped out. Okay, so this is what we mean by a loss of 76.6 billion USD. Another way of looking at this, I mean, what was expected in terms of revenue generation in 2020 was in the realm of 172 billion. Okay, So the 76 billion is almost, literally half the revenues. So a 45% decline. We also see the airlines. I mean, very similar. And there is this interrelationship, obviously, between airlines and airports. We share the same, consumer, and very dependent on the passenger. So they estimate losses even much higher. Of course, the airline industry is much bigger. It's about 4 times the size of the airport industry. So their actual losses are proportional in that sense. So 250 billion in losses. So even beyond airports and airlines, I mean, this has a huge multiplier effect. So the travel industry will obviously be impacted as well, right? So we see these huge declines in international visitor spending. And I mean, one of the things, this is something that's produced by Oxford Economics, but we see what they've looked at in terms of the research, they see that the international market impacts will tally 13 times the impact of SARS and nearly double the impact of 9/11. So that's in terms of international spending, okay? If we combine both domestic and international spending, I mean, we're looking at an impact that will be 6 times that of 9/11, okay? So here, if you look at the lower right-hand side of your screen, 355 billion impact across the travel industry in terms of consumer spend. So, I mean, right now, a lot of the charts I'm showing you are in this other quadrant, right, where everything is negative. One of the things I would like to talk about now is the recovery, okay? And if we look at the past data, we look at past recessions, recoveries have different shapes. And having an understanding of the shapes could potentially help you plan for the future, right? So you have a V-shaped recovery, which is basically a sharp downturn and then a quick bounce back. A U-shaped is a bit more of a prolonged downturn, or a prolonged recession. L-shaped, which is probably the worst case scenario, is a lengthy recovery period, right? So it takes a bit longer to get back to the well, in this case, the pre-COVID levels, right? So let's look at some of the past data. So if we go back, to the beginning of this century, and if we look at, say, 9/11, we saw a decline, and this is a global series, right? So of course, in the United States context, the downturn was more severe, but globally speaking, we saw a decline of 15%. Okay. Now this recovery actually followed a bit of an L-shaped recovery. There was a slight bounce back, but the recovery took almost 2 years. Now, unfortunately, to get to pre-9/11 levels, you had the SARS outbreak, okay? The SARS outbreak, however, was kind of this V-shaped. It was a quick bounce back. And I mean, many of us in call it the analytical or the economic analysis community earlier on believed that COVID-19 would very much resemble SARS, what we saw with SARS. So meaning this 5, maybe 6-month overall recovery period, right? Now, unfortunately, we now know that that is unlikely the case. It will not be the case. Fast forward, if we go to the Great Recession or the global financial crisis, we saw a decline of 7%. Now, this was a prolonged decline, right? It was more of this U-shaped recovery, right? It took up to 2 years to get back to pre-Great Recession levels, right? So this was a U-shaped recovery. Now, I've been talking a lot about passenger traffic, but what about air cargo? Well, air cargo during the Great Recession actually a lot more sensitive to the business cycle, and the decline. It's a bit kind of a leading indicator, forward-looking indicator, right? So the decline happened a bit earlier, and the decline was much more pronounced. So here you have a bit more of a skinnier type of view, but the decline was in volumes was a decline of 20%. So what are we looking at now in terms of the COVID-19 outbreak? Okay. And this is these are the kind of the assumptions that we build into our forecasts and simulations. So we're looking at the most severe decline will happen in Q2. Right? So Q1, Q2, we'll see the biggest decline. Now, hopefully, a lot of these, call it the COVID-19 cycle, as we've seen in China, kind of plays out over 4 or 5 months. So hopefully, we're reaching the peak in some major markets right now. If that occurs, then we would envision that some of the travel bans will be then lifted later in the summer. As a result of that, there would be a slight uptick in traffic, right, as a result of lifting these travel bans. But traffic will be slow to come back. Traffic will likely take at least 2 years to fully recover to pre-COVID-19 levels. So what we're seeing is almost this quasi U-shaped, embedded in this L-shaped curve in terms of recovery. Okay, so towards the end of 2021, if we're lucky, for a full recovery. Now, what are some of the reasons for this, call it this L-shaped recovery? And this slide is actually quite important, and I think it's good food for thought for us in the industry here. I mean, right now as it stands, we're in a recession, right? We have this rapid rise in unemployment. Of course, the governments are stepping in to provide wage subsidies, but there's been a severe contraction in economic activity. Daily commerce has ceased to stop, right? So we're in a recessionary period. Now, the other thing that the industry needs to think about is the loss of consumer confidence, right? The consumer is very important to the economy, but very important to our industry. So, you know, just looking at some of the diagnostic criteria for COVID-19, unfortunately, a lot of this has been associated with air travel, right? So we have to, as an industry, kind of combat this economics of fear to regain the passenger. One of the challenges, though, we may see across the industries potential behavioral changes. I mean, one of the things we've talked about, and I'm the secretary for the World Economic Standing Committee, and some members have already voiced this concern, is declining trends in business travel. Okay, and it may very well be that this trend continues, and we may even see a sharper decline in business travel. Right. Part of that may have to do with what we're experiencing now. You know, the growth of virtual meetings. There's no doubt that there are potential productivity gains as a result of that, but that will definitely have repercussions on air transport. Now, one of the things we see in the data, especially after 9/11, after SARS, we see this substitution effect away from international travel to domestic travel, right? So instead of going abroad on vacation, people will likely stay domestic. So we'll likely see the same thing happening under this scenario as well, under the COVID-19 scenario. Now, that's the bad news. I mean, let's talk a bit more about the good news. What do we know right now about some of the countries that are coming out of this? Yes, I mean, there's discussion about some of the Chinese data out there, but we know the shape of the curve more or less, right? So with the life of this, at least in the Chinese context, it's about this 4-month period. Yes, China has taken on maybe someone could argue some more drastic measures of containment. But if we look to China as, what is the kind of the duration period of this, we could see them coming out the other side. Here again, looking at the Chinese case, and this is a report that just came out by McKinsey and Company, consumer confidence is slowly picking up, right? So week by week, we see a certain degree of optimism. So people are going back to work. The quarantines have diminished. So there is this boost now, a slower boost in consumer confidence that is coming back. Now, if we look at the shape, I mean, it kind of has this U-shaped, L-shaped recovery, right? It's still early to tell, but we see this Chinese recovery occurring. I mean, here you have it. This is the OAG flight schedules, but you have these incremental gains. So it looks like they bottomed out in February, and now as we go into March and April, we'll see this slight uptick. Now, what are some of the risks, unfortunately, to this global recovery? The reignition of the virus, or some people in the media are saying, a reimportation of the virus. Another issue is, as China comes out of this, other economies are slipping into, full-scale recessions or even depressions. If we take the United States, for instance, I mean, Q2 is projected to contract by 34%. Okay, so there is this. The recoveries are not synchronized, unfortunately, because China is an exporting country, right? And here you have some of the major importers. And they're all slipping into recessionary states. South Korea, actually, mind you, is another example. Like China, they're coming out the other side. And there's a lot of lessons to be learned there, especially from the Koreans. They've done a lot of good things in terms of testing and so on. So that's the kind of the economic impact. What about the policy responses? What are some of the policy responses and relief packages that the airport industry are looking at and ACI has been advocating for? Now, before jumping into that, we need to think about the airport business and where do we get all our cash flows from, right? So you have the aeronautical side of the business, which is basically based on charges that are levied on aircraft, so airlines, and also passengers. But the vast majority of aeronautical revenues actually come from passenger charges, right? Except, well, I mean, there are some exceptions like North America, but for the most part, in most parts of the world, there's a high reliance on passengers. Similarly, you also have, non-aeronautical revenues. There too, there's a huge reliance on the passenger, right? As much as 60% of non-aeronautical revenues. So those are revenues, from duty-free, car rental, and so on. About 60% of that is derived directly from passengers, right? So passenger sales and so on, in tandem with concessionaires. So, when you have dwindling or plummeting traffic, this has huge stress on the revenues. I mean, and one of the things we saw earlier on, especially in the Asian case, many of the hub airports actually in Asia and even the Middle East, they rely much more on non-aeronautical revenues. In fact, even above and beyond 50% of their revenues come from non-aeronautical sources, right? So with the earlier bans, some of the higher yield passengers, like Chinese travelers, these were expenditures that were unrealized, right? So because of all of these travel bans. Now, that's the revenue side of the business. What about costs? Well, it's a capital intensive business, right? So there are these high fixed costs, and airports need traffic to kind of achieve a certain level of economies of scale, okay? So that those costs are kind of spread out across traffic or units of traffic. But operating expenses are also semi-fixed, at least over the near term. Now, airports have definitely taken every measure possible to kind of reduce costs by closing a terminal and so on to kind of optimize the services. But the variability of costs is very difficult, at least in the airport context. So I wanted to kind of give that as the backdrop when we talk about our policy concerns, right? So one of the first one, and there's 6 of them that I'll talk about right now, is the protection of airport charges and revenues. Now, airports, I mean, with all the dwindling traffic, there still has to be a charge for a service that has been rendered, right? I mean, this is the lifeline, the lifeblood of the industry. I mean, at the end of the day, I mean, there's no such thing as a free lunch. Although we're all in this together with airlines, and I mean, airports have already started to kind of alleviate parking charges in some cases. But a blanketed across the board removal of charges is not possible. It's not possible. So we need to protect whatever revenues we're generating now, okay? The other thing that we've worked together, again, with airlines, is the alleviation of airport slots usage requirements. So this is the alleviation of the so-called use it or lose it rule, right? So the way the airport industry has been taking this, or at least ACI has been advocating, is let's take this incrementally. So let's look to June 30th as the kind of the next date, and then see whether or not a full season waiver is required or not. So the approach we're taking is very much, I call it a data-driven approach. In terms of respecting the World Airport Slot Guidelines. The other thing is removal of concession fee payments to governments. I mean, one of the first markets to do this, we saw this happen in Brazil. Just recently, we saw this happen in Canada. Now, it could be argued that, well, with dwindling revenues, now it becomes, or may become meaningless because the concession fee payment is a percentage of revenues. Well, no, that's not entirely true. I mean, every little bit helps here, right? So it's the sum of all these things that are very helpful, and we continue to advocate to governments. Now, the other thing too is the alleviation of capital projects, right? We're not in a context, many airports are not in a context to invest in CapEx projects. Sometimes as part of the concession agreements, they're required to invest. Of course, there has to be alleviation on this front as well. Access to finance, airports, airlines, we need cash, right? Whether that be loan guarantees, interest-free loans, the industry needs cash and liquidity quickly, okay? So this is something that is also very important here. Tax relief, okay? And this is an area we're very much aligned, I think, across the industry, across the multiple industries, the alleviation of taxes. So whether we're talking about corporate taxes, payroll taxes, but also passenger taxes. I mean, and this will be very important as part of the recovery phase, right? We need to stimulate demand, okay? So the removal of passenger taxes will be vital, okay, as part of the recovery phase. government assistance. I mean, right now, like I was saying earlier, and this is very much related to the access to finance, uh, but airports need some cash injections. So whether this is in the form of wage subsidies or other packages or grants, the industry needs cash now. Now, one of the things I'd like to highlight here is the jobs aspect of the industry, right? So this is why part of this immediate financial assistance is required, because there is this multiplier effect, right? The industry, if we look at the overall industry, I mean, we generate about 6.1 million jobs globally. So those are all those individuals working on the airport site, okay? So this makes up about 60% of the aviation industry, are working at airports. And this has a multiplier effect, or I mean, to kind of appeal to the literature here, um, aviation has this catalytic effect. But right now, we're seeing everything in reverse. In normal times, there would be this positive impact on tourism and the other industries. Well, now we're seeing complete reversal. So if we look at, call it aviation's direct, indirect, induced, and catalytic impact, I mean, we're looking at jobs in the realm of 66 million jobs globally. I mean, again, what does this figure mean? Well, how do we wrap our mind around this figure? Well, that's comparable to the populations of France and the United Kingdom. So, I mean, this is the gravity of the situation that we need to consider. Now, to summarize, just to kind of summarize the presentation here, we're seeing huge losses. We're predicting that the bulk of the losses will be in Q1, Q2. That being said, we will still be at pre-COVID-19. We will not get back to pre-COVID-19 levels probably for 2 years, unfortunately. Right? So we saw this decline of 38% and decline in revenues of 45% for the year as a whole. We saw this U-shaped, in terms of the recovery path, we saw this U-shaped and potentially a longer term L-shaped recovery. I mean, on this point, I mean, I truly hope we are wrong, but a lot of the indicators point to this type of recovery. I mean, and this has to do with a lot of the compounding factors. Not only are we faced with a health crisis right now, this humanitarian crisis across the industry, but we also have a faltered economy. So we have these several compounding factors. The other factors we have to deal with, the economics of fear, right? We're going to have to spend some time as an industry regaining consumer confidence, okay? And then we talked about policy measures, right? I mean, at the end of the day, of course, there's things that government could do to alleviate things on the cost side, but the industry needs cash injections. Now, a lot of governments have stepped up, but we need a more concerted effort on this. And one of the things we've been advocating a lot with our, other international organizations and to governments is that no single measure or relief package should necessarily benefit one actor at the expense of another one. I mean, we're all in this together. We need the airlines, and the airlines need us, and the same goes for all the others in the value chain or the aviation ecosystem. Now, so I just have a few more slides. I want to kind of emphasize the point here that a lot of this, I mean, these slides and a lot of other useful information that my colleagues put together is available on the ACI website. So there's this COVID-19 news hub, and I suggest you check it out. The other thing, I mean, a lot of, I put together these slides but a lot of the brains behind, looking at the different simulations have to do with two colleagues here. There's other colleagues in the team that are involved as well, but especially looking at the simulations and the different scenarios. So I want to thank, Ilya Lyutov, who's the manager of economic policy, and Guillaume Radier, who's a data scientist. And actually, you'll have an opportunity to kind of engage with them shortly. Now, when I was putting these slides together last night, I mean, there was a part of me that was obviously depressed by looking at all the data and all the things that are, the negative growth rates and so on. But looking at previous crises, yeah, it could be argued, we've never seen anything like this. I know in my career, in my life, and many of us, we've never seen anything like this. But we need to have this sense of optimism. I mean, I can't help but be sentimental about airports, right? These are our points of connectivity. These are so vital to the economy. So I think we will make it back. And one of the slogans that we've put through is, together we will get through this. So on that note, I thank you for this opportunity.
Perfect. Thanks very much, Pat. We'll now move over to the question and answer period. And again, I encourage you, we do have some questions already entered. If you do have questions, you'll notice the chat box on your screen. I'd encourage you to answer those, or type in your questions, I should say, there. Pat, you did a fair amount of the talking. I'm just reading a first question here, so I think this one's more for Ilya. ACI in its latest economic impact assessment mentioned that airport unit revenues will face downward pressure. Ilya, maybe I'm pretty sure this is for you. Could you please elaborate on what airport unit revenues are and what are the key driving forces behind the likely decline?
Thank you for the question. Well, first of all, I would like to start with the fact that we're going to witness declines not only due to the declines in the absolute volumes of traffic, but also due to the relative decline in unit revenues. What are the unit revenues? So these are revenues on a per traffic unit basis, normally standardized on a per passenger basis. And this is a parameter that is being monitored, tracked by most airports and ACI at a global, at a regional level. And of course, we have enough evidence to assume that we're going to witness double-digit declines, especially on the non-aeronautical side, on the commercial side of the business, because many stores are closing down, they're shutting down, they're not operating anymore. And there are tricky situations when airports have very few remaining flights, right? Very few passengers in the terminal. So for those stores, shops, food and beverage outlets, it's easier to shut down just because the costs of operating are not commensurate with the revenues they can generate from the residual passenger traffic. Also think in terms of the structure of the concession fee payments. So normally the structure takes the formula of a minimum guarantee amount plus percentage of revenue. And here you can imagine that, of course, with zero revenue, concessionaires will be paying the minimum guarantee amount, or not even that. So a multitude of factors will play into this story. But in general, of course, the loss of consumer confidence, the profound change in behavioral patterns, people will not be shopping to the same extent, people will not be dining to the same extent, etc. So I hope this more or less answers the question. Thank you.
Thanks very much, Ilya. I certainly hope so. And if it doesn't, please type in a follow-up to that. Go on to the next question. I guess I'll open this up to the group. As airports are catalyst engines of local economy, Pat, you touched that a little bit in the presentation. What are related policy changes? So we talked about what the federal government here in Canada was doing for the airports as far as rent. needed to support the broader value chain. So I'm not quite sure who wants to answer that.
Yeah, well, I think, I mean, we're at a stage now where, and I mean, governments are doing this, but it's cash injections. Because, I mean, obviously this health crisis takes precedence, but unfortunately the travel bans have, cut off the lifeline of the industry. So it's really these cash injections. Now, these cash injections, though, like I was saying earlier, has to be done kind of across the value chain, recognizing that we're in this together. So like I was saying earlier, the whole aviation ecosystem is intertwined, right? We all kind of need each other. So yeah, I think it's really capturing this holistic approach because of this catalytic impact that aviation has.
Okay, thanks, Pat. Next question. So, should airports continue to invest in marketing and business development to best be positioned on the rebound? Should they increase investment? Ilya or Patrick, I don't know who wants to answer that.
If I may answer, I think we need to separate here two things: investment from marketing efforts. And when it comes to investment, of course, some airports can gain some competitive advantage by doing those counter-cyclical investments, especially when the airside is empty, the terminals are empty. So one may think that there wouldn't be a better opportunity to do all those capital projects. But on the other hand, most airports are struggling with covering the basic operating expenses and mainly the salaries to the personnel, to the staff. So it is more of a theoretical situation rather than practical, in my opinion. Though I'm sure that maybe some airports will be able to take advantage of the current situation and do those capital projects they were never able to do just because these airports were so busy. But when it comes to marketing undertakings, etc., I think these are not probably wise in the current context, since they'll be preaching to fall in demand, right? So probably the returns from that will be very, very limited. Thank you.
Thanks, Ilya. So just read this question. Is somebody working on a post-COVID-19 traveling measures like after 9/11? And what could we expect?
Go ahead.
Well, I'm not sure because the question is phrased a bit in a very open-ended way, in my opinion. But of course, everyone is working on defining those economic policies that are essential to establish the path to recovery, right? Because without those policy measures that Patrick was talking about, like taxation, concession fee payments, wage subsidies, protection of airport charges and revenues, etc. So these are typical policy measures that are formulated by the industry, and also we are happy to see that a number of national governments are actually implementing those policy recommendations. Patrick, if you have anything to add.
Yeah, thank you, Ilya. I mean, yeah, I mean, this notion of recovery plan is definitely in the works, and it's something we're working on with other, well, with governments, but also other international organizations. So the World Health Organization, UNWTO, so the World Tourism Organization, ICAO, so the International Civil Aviation Organization, and then many others like IATA, CANZO, and so on. So we're actually all working together to have these joint recovery plans. So the industry is coming together on this.
Yeah, and if I can just
Okay, thanks, Patrick.
jump in here,
Go ahead, Guillaume.
just to add on it. So I don't know to how many of you that'll speak. It's a bit more of a technical note, but when I hear plan, I'm always as a data scientist expecting someone to ask me to forecast something. And this is a very difficult time to be forecasting. One of the, I guess, a big name in forecasting, Rob J. Heinemann, a professor at Monash University, he has a blog, and he's put it very nicely in his blog why standard time series model are not designed to forecast these types of events, such as downfall, recovery, and what kind of models are better used for that, which are kind of agent based, which is something that natural sciences are way more advanced than we are here. I guess the human factor that's hard to predict is what's making it tough for us. So yeah, just a little kind of technical note on recovery plan. We have these kinds of broad assumptions, V-shaped, U-shaped, L-shaped, and then we'll use some simple assumptions to get scenarios. But when you're in the middle of it, it's hard to plan. You need to be a bit more data driven and be ready to update often, which is kind of what we're doing with these webinars and advisory bulletin updates.
Perfect. Thanks, Guillaume. And yeah, the human is always the hardest factor to measure in any case. Just over to probably Patrick or I guess Guillaume on this one, from a good old friend of ours, actually. Have you noticed a particular pattern in the OAG data? When are airlines planning to provide capacity?
Yeah, maybe Guillaume, maybe you want to interject here.
Yeah, sure. I mean, if you look at the Chinese case, which we saw in Patrick's slides earlier, there was already kind of a re-injection of capacity. If I remember correctly, there was a kind of significant adjustment upwards, and then it was kind of slow and steady gains. Given that China has a huge domestic market proportionally to international, I think that portion is maybe a bit less concerned with the whole kind of international bans happening. I think that's something that we might see in other markets as well, where we'll have kind of re-injection of capacity starting before kind of the lift of bans and everything. But as the medical side of the crisis kind of reaches towards the end there. Because of course, I mean, right now, early April, I think we're still kind of in the middle of it.
Perfect, Guillaume. Thanks very much for that. Another question. So Patrick and maybe Elias, more on the policy side. How do we counterattack, in brackets, the argument of IATA that airlines are worst hit? I'm conscious airline pays half our mortgage here at home, but still, une bonne guerre, as we say. So how could we basically, you talked about some of the arguments, we're all in this together, but what would be your advice on countering some of that?
Ilya, if you want to take the first stab at it.
Yeah, if I may start. I think we need to be data driven. We need to operate with the numbers, and the figures show that our decline is proportionate to our size, and it goes very much in parallel with IATA, which means that we are in the same boat, right? So even if you track the way we're revising our economic impact, it was very much in parallel with IATA, because at different points we were estimating a similar magnitude of financial losses as well as losses in terms of traffic. So this is just a direct testament to the fact that we are very, very much interrelated. And I think the best way is to continue using data and evidence, facts, to support our statement. Patrick?
I think Ilya kind of touched upon it actually quite eloquently. So, and I may come back to the point of, this catalytic impact. I keep emphasizing it, but it's the jobs. You have on the airport site, you have a whole array of businesses that operate there, right? And these are jobs. You know, immigration, customs, duty free, car rental services. These are all jobs, and it makes up a big chunk of the industry. And so that we can't kind of take a blind eye to that. We have to recognize that an airport being an engine of growth for the economy.
Perfect. And I think that's all the time we have. We're coming up at 9 o'clock. So just for the benefit of all the participants, we're aiming to do a future webinar, obviously, as the numbers and everything is quite dynamic in the coming weeks. Just a reminder, next week on Thursday, we will be having a webinar on business continuity. And again, that handbook is free for download. So ACI in Montreal and the regions are definitely working to support the members in every way we can. I'd like to thank again our presenters, being Patrick, Ilya, Guillaume, along with thanking Kaylee from my team, who's been in master control and been behind the scenes making this happen. I'd also like you to invite you to fill out the exit survey, as we do value comments and feedback, and we're really aiming to make sure we have current issues that are addressed, and really important for us to evaluate the success of these events. So on that, I'd like to thank everyone. Remember, we're in this together, and ACI is there to support you. Wishing you a good evening or good day. Thank you, everybody.